It's 2021 and a hot new electric car company has everyone's attention, promising an all-electric SUV, one of the first of its kind and having the biggest IPO of the year. Rivian dominated the conversation in the electric vehicle market. But then it crashed. The stock plummeted by 70% in the past year. Supply chain complications crippled the development of the company. Those issues caused the company to slash their production estimates. This has led people who were optimistic about the company to question whether it's failed. But has it? Well, we're going to start this story at Rivian's IPO in 2021. Hopes were high, and saying people were excited would be an understatement. They had the biggest IPO of a US company since Facebook, raising $12 billion during its debut. People really had high hopes for the company. Being backed by mega corporations such as Amazon and Ford, the company planned to start deliveries of its R1T, an electric truck, beating Tesla to the market. At the start, they had a valuation of $66.5 billion, and keep in mind they hadn't given a single customer a vehicle. Now let's look at the first vehicle they're making, the Rivian R1T. Now it hasn't shipped to consumers yet, but the specs are pretty impressive. The truck can go 0 to 60 in 3 seconds. It can tow over 11,000 pounds. The range of the truck in 2022 is 314 miles. However, 500 trucks were recalled for an airbag malfunction. The second vehicle Rivian is boasting is the R1S, which is an electric SUV. The range for that is 260 to 320 miles depending on the battery pack selected. There's ample storage space and there's a built-in driving assist feature. Meanwhile, in late 2021, Rivian was soaring to new heights with the value of the company climbing to $158.5 billion. But then what happened between then and now, where the valuation is $26 billion, a fraction of the peak? Well, supply chain complications and a reality check for the valuation of the company sent the stocks tumbling. In 2022, almost all car companies were expanding into the EV market, and that put a strain on the lithium and nickel supply. It's been getting a lot harder to get hands on electric vehicle materials, and that led to Rivian to cut their production of trucks in half, from 50,000 to 25,000. By the way, if you like this video, subscribe for more. Rivian also didn't communicate whether or not they reached their 2021 goals, which made investors nervous. Ford, which had heavily invested into the company, having owned more than 10% of the stock, sold 7 million shares for a total of $188.2 million. The main issue of the company is whether or not they'll be able to produce the vehicles needed to satisfy the enormous demand. Amazon is worried that Rivian may not be able to deliver on their ambitious goal of sending them 100,000 delivery vans. The problem is inflation making parts more expensive and supply chain complications making those same parts more scarce. This caused Rivian to inform their customers who had already placed deposits for vehicles that they would have to pay 20% more because of increased costs. Obviously, people were furious, and this contributed to growing pessimism regarding the company. But does all this make Rivian a failure, or did people have their expectations too high from the start? Well, Rivian, along with many other startups, has faced big revaluations. In other words, the stock prices for them may have been too high at first, and now we're finally seeing them come back down to earth. The company still has a lot of potential, and they're dealing with supply chain issues that all automakers are struggling with. So Rivian hasn't failed yet, but they're getting dragged down by the current economic situation. Right now they've fallen behind on their own goals that they set out for themselves, and they're gonna have to play catch up.